Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday, the 20th of December, as we approach the Christmas festive season. Starting off with agronomics, where we've got this very good-looking rising trend channel there from the early part of October, broken through the previous 9.5 pence intraday high of December, and while there's no end-of-day close back below that, we should head quite directly towards the top of the October channel, as high as 15 pence by the end of next month. At this stage, only really back below the 20-day line, and the last swing low for this market at 8 pence, really delaying the upside scenario. But hopefully we just head directly through to 14 pence plus or 15 pence plus without any break back below 9.5. On to a similar, which has had months trying to regroup after the rather disappointing return in the late summer for the shares, bouncing off 20 pence a couple of times, and we've got an uptrend line there from September running through around 23 pence at the moment. Broken this line of resistance from November around the same 23 pence area, 23.5 let's say, and the 50-day moving average broken on a weekly close basis at 24 on Friday, at least while we're above the 50-day line, looking for 32, 33 pence, which is the top of the rising September trend channel, hopefully as soon as the end of next month. Next up, a stock which looks rather similar to the first stock we looked at, agronomics. Here we've got a sort of longer version of agronomics, all active asset capital. Very, very strong move on Friday, just sort of spiked up there around 1 o'clock and then never looked back. The rather simple call at the moment is that while we're above 10 pence, which was the initial December resistance, we're up to hopefully the August resistance line projection there as high as 16 pence, hopefully as soon as the end of next month, and actually obviously the way things are going, the end of this month, but let's see how we go. As I said, with agronomics, ideally there's no break back below the initial December peak. Onto a stock which has amazed even me after 30 years in the saddle looking at these things. AFC Energy, we had the gap through resistance on Wednesday, another gap on Thursday, and another gap on Friday. We looked rather optimistic, saying that above 40 pence we'd head up to 60 pence last week, but we've already done that just in a matter of days, hitting that technical target that we had there at the June resistance line, just shy of 60 pence. The view now is that obviously while there may be a need for a rest, at least while there's no end of day close back below Thursday's peak at 51 pence, we could go on to have a new leg to the upside over the next month or so, as high as that blue November resistance line projection from last week, heading up towards 80 to 85 pence. That would be, I suppose, by the end of February, if we're lucky, by the end of next month. But obviously, with that, what's that, triple gap to the upside, anything is possible. I think I've seen that kind of enthusiasm in a small cap company for quite a long time. Reasonable amount of enthusiasm for 4D Pharma on the bulletin boards and elsewhere. Here we've had a break of that resistance line there from October, and also the 50-day moving average at 101 pence. While we are above the 50-day line on an end-of-day close basis, hopefully the shares can at least head back towards the November intraday peak at 127 pence, hopefully by the end of the next month, especially given the way that we're in COVID hell at the moment. On to Dev Clever, which I've looked at a few times, but it looks like finally the shares are on their way, or going to be on their way. Sort of inverted head and shoulders type formation with that last hook to the upside at the end of last week. Obviously, we'd like to break 9.6 pence, which is that August resistance line at night at that level on an end of day close basis. If we can do that above 9.6, looking for the top of the March resistance line, March trend channel, currently pointing at 13 pence, hopefully by the end of next month. On to another pharma situation, EvGen, where we've got the shares breaking, well, they've already broken that November triangle, That was around the the 9 pence level, or 9.1 pence level. Nice end of week close above the 50-day and at the 200-day moving averages at 10.2 pence for the 200-day line. 200-day line also rising very sharply, which implies that we should head quite directly towards the post-May resistance for the shares above 15 pence. And that's valid while we hold above the 9.5 pence area, which is that now the area of that broken October or November resistance line. So basically above 9, looking for 15 pence plus. Moving along to a stock where there seems to be a lot of speculation, more than average, I would say. iMedia, here we've got the shares, again, in a rather extended consolidation since September, rather reminiscent of the situation at Similar, but looks as though if we can get an end-of-day close through 27 pence, breaking that September resistance line, we may see the top of that rising trend channel from July up towards 45 pence plus, hopefully by the end of February. And all the while, we need to stay above the floor of the channel at around 23 pence. So above 23, the upside valid, and above 27 would be the momentum trigger for iMedia. Just a few to go now. Ironveld is next, and here we've got an interesting technical setup, given the way that we had that final bear trap below 0.34, so down to what was that, 0.32 for December, then broke that line of resistance and the falling wedge from September, October, around the 0.45 level. Above that, looking for the 50-day moving average, and the gap down there during November around the 0.75 pence area. So above 0.45 for Ironveld, heading towards hopefully around the 0.75 pence area, and ideally as soon as the end of next month. On to a stock which is rather less high profile than most of the ones we looked at today, Carillion Diamond Services. Here we've clearly broken September resistance line and the 50-day moving average, 5.37 pence. The longer we stay above the 50-day line, the greater the chance of an end of January move, or move by that time up towards 9 pence at the top of the rising 2019 trend channel. This stage really only back below the 5 pence area, and that September resistance line really delaying the upside scenario. 3 more stocks to go. The first one is arguably the best new situation of the day. We've got Pharos Energy with the break that we had up through the 200-day moving average last month, around 16 pence. Since then we've drifted higher, and the longer we remain above November resistance at 17.5 pence, the greater the chance of a move towards the top of the broadening triangle from April, currently pointing at 38 pence, and hopefully that can be seen by the end of February. Upside valid at least while we hold above the 200-day moving average. Going on to a stock which I'm not sure how the fundamentals are here, but on the technical front, looking rather solid indeed, or very solid indeed. Extended base here since March, and that final bear trap in October, and we've had highs and lows since then. Nice bull flag there above the 200-day moving average. That's the black line there, around 1.8 pence. And the longer we stay above the 200-day line, the greater the chance of a move to the top of that rising April trend channel at 6 pence, hopefully by the end of February. If you're cautious on the situation, which some may be, look for an end-of-day close through 2.3 pence. Just one more positive break of this bull flag, or ideally the September peak there at 2.8, but should be on our way already, especially above 2.3 pence on Petra Diamonds. Last stock of the day is Quadrise Fuels, where we can see that there's been a break of this post-August symmetrical triangle, breaking also the 50-day moving average on a weekly close basis, and a sort of flag formation there above the that triangle or / wedge. The view is that while we're above the top of that resistance line there from September at 1.9 pence, we could head towards a March resistance line projection as high as 5 pence over the next 1 to 2 months, i.e. by the end of February. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.